The Philippines stands at the center of a global power struggle, balancing between China and the United States. With billions in Chinese investment on the table and a renewed U.S. defense alliance, Manila is walking a diplomatic tightrope. President Ferdinand Marcos Jr. calls this an independent foreign policy, seeking prosperity from Beijing while relying on Washington for security. The world is watching. Can the Philippines benefit from both superpowers, or will it be forced to choose? The stakes are high, not just for Filipinos, but for the entire region. This story explores the deals, the risks, and the future of a nation at the crossroads of history. Is this masterful diplomacy, or a dangerous gamble with the nation's fate? The Philippines' alliance with the U.S. is rooted in a shared history, forged in the crucible of World War II and deepened over decades of military and political partnership. American influence shaped the country's institutions, defense strategies, and even its sense of national identity. For generations, the U.S. was seen not just as an ally, but as a guarantor of Philippine sovereignty and security. But in recent years, China's meteoric rise has complicated these old loyalties, introducing new dynamics that Manila can't afford to ignore. The city's skyline now bristles with Chinese-funded projects, and the presence of both American and Chinese symbols reflects a nation at a crossroads. As China became an economic powerhouse, Manila found itself pulled between Washington's security umbrella and Beijing's economic opportunities. The Philippines is now a key player in a high-stakes game, balancing the promise of Chinese investment with the reassurance of American military support. President Marcos Jr. has doubled down on a strategy of hedging, seeking to maximize gains from both sides without becoming dependent on either. He's walked a diplomatic tightrope, engaging both superpowers in dialogue, trade, and security cooperation, while carefully avoiding overt alignment. This approach is a response to new realities. America remains a vital ally, providing military training, intelligence, and a security guarantee that is especially crucial amid regional tensions. But China's economic gravity is impossible to ignore. Its investments have transformed infrastructure, created jobs, and opened new markets for Filipino goods, making Beijing an indispensable economic partner. The challenge? Managing contradictions, especially as Chinese investment comes with territorial disputes in the South China Sea, sparking protests and raising questions about sovereignty and national interest. In July 2025, the Philippines signed major, contrasting deals with both superpowers within days. These agreements, covering everything from defense to infrastructure, highlight Manila's determination to keep its options open and avoid being boxed in by either side. This was no accident, but a clear signal. Manila intends to chart its own course, leveraging its strategic position at the heart of Southeast Asia for maximum benefit. The country is determined to assert its agency, refusing to be a mere pawn in a larger geopolitical contest. The nation's future now hinges on its ability to walk this diplomatic tightrope, balancing security, prosperity, and sovereignty in a world where the stakes have never been higher. On July 21, 2025, the Philippines and China inked a $10 billion investment deal, promising rapid economic growth. The funds target infrastructure, agriculture, and technology, sectors vital for national development. But controversy erupted over a secretive joint resource exploration plan in the disputed South China Sea. Critics warn this could legitimize China's sweeping maritime claims and compromise Philippine sovereignty. President Marcos Jr. defends the deal as pragmatic, insisting it won't undermine territorial rights. Business leaders welcome the investment, but protests erupt, accusing the government of selling out. The nation is split. Is this a golden opportunity, or a dangerous concession to Beijing? The answer may shape the Philippines' future for decades. Just a day after the China deal, President Marcos Jr. stood with U.S. President Trump to announce a new trade agreement. This agreement marks a significant moment in the relationship between the two nations, highlighting the complex interplay of international diplomacy and economic strategy. The U.S. imposed a 19% tariff on Philippine imports, better than the threatened 20%, but still a heavy blow. This tariff affects a wide range of products, from agricultural goods to electronics, impacting both large exporters and small businesses in the Philippines. In exchange, the Philippines opened its market to certain American goods, likely including U.S. automobiles. This move is expected to benefit American manufacturers and provide Filipino consumers with more choices, though it also means stiffer competition for local producers. Trump praised Marcos as a tough negotiator and signaled indifference to Manila's dealings with China. His remarks were seen as a strategic move to strengthen U.S.-Philippines ties while subtly acknowledging the geopolitical tensions in the region. The State Department, however, voiced concern over the China deal, revealing a split in U.S. policy. This division underscores the delicate balance the U.S. must maintain in its foreign relations, particularly in the Asia-Pacific region. For the Philippines, the deal brings certainty, but at a steep cost: higher tariffs and increased competition for local industries. Small businesses and local manufacturers are particularly vulnerable, facing new challenges in an already competitive market. The trade-off is clear: economic pain in exchange for continued access to the American market. This access is crucial for the Philippines, as the U.S. remains one of its largest trading partners, providing opportunities for growth and development. The question remains, can the Philippines withstand the pressure from both sides? Balancing relations with both the U.S. and China is a delicate act, requiring careful diplomacy and strategic planning. The answer will test the nation's resilience and resolve. The coming months will reveal whether the Philippines can navigate these complex international waters and emerge stronger. The $10 billion Chinese investment could transform the Philippines, funding infrastructure, jobs, and modernization. But critics warn of debt-trap diplomacy, citing other nations' struggles with Chinese loans and political strings. The U.S. trade deal brings its own challenges. A 19% tariff threatens key industries and jobs, even as some American goods enter tariff-free. Local businesses face tough competition, and the risk of trade imbalances looms. The economic reality is a double-edged sword: massive investment from China, but painful tariffs from the U.S. The long-term impact? Uncertain. The Philippines must balance opportunity with risk, prosperity with sovereignty. The stakes could not be higher. While Manila actively seeks Chinese investment to boost its economy, its military alliance with the United States is not just holding steady, it's growing stronger than ever before. The two countries are forging deeper ties, blending economic pragmatism with a renewed sense of strategic urgency. In September 2025, the U.S. funded major upgrades to a key Philippine naval base facing the South China Sea, transforming it into a modern hub for joint operations. These improvements include new radar systems, expanded docks, and advanced logistics facilities, all designed to support a greater American presence in the region. American drones now patrol Philippine skies, while joint training and military exercises have intensified. These drills are specifically tailored to counter China's evolving maritime tactics, and they send a clear message: the U.S. and the Philippines are preparing for any scenario. The overarching goal is to boost the Philippines' ability to patrol and defend its waters, especially at flashpoints like the Second Thomas Shoal, where tensions with China frequently flare. Enhanced surveillance and rapid response capabilities are now at the forefront of Manila's defense strategy. U.S. Defense Secretary Pete Hegseth has made it clear: Washington is fully committed to deterring Chinese aggression in the region. His recent visits and high-level meetings underscore the seriousness with which the U.S. views its obligations under the alliance. The Mutual Defense Treaty, signed decades ago, is now more relevant than ever. The U.S. is not only arming and training its ally, but also sharing intelligence and technology, preparing the Philippines for a new era of maritime confrontation and regional uncertainty. This deepening alliance serves as Manila's insurance policy, providing a security guarantee even as it seeks economic gains from Beijing. The Philippines is determined to benefit from both worlds, but the stakes have never been higher. As the U.S. and China vie for influence, Manila's balancing act grows ever more precarious, with each move watched closely by both allies and rivals across the region. The South China Sea remains a powder keg, with China's sweeping claims clashing with Philippine sovereignty. Violent confrontations, ramming, water cannons, injuries, have become routine as both sides assert control. Manila's deals with China and the U.S. are shaped by this volatile reality. Some hope economic cooperation with Beijing will ease tensions, others fear it rewards aggression. U.S. military support is Manila's hedge against failed diplomacy. The Philippines is gambling that it can turn a flashpoint into a zone of managed cooperation. but one misstep could plunge the region into crisis. The Philippines is deeply divided over its dual-track policy. Protests erupt in Manila, with activists decrying the China deal as a betrayal of sovereignty. Business leaders, meanwhile, praise the influx of capital as essential for recovery and growth. Experts call Manila's approach classic hedging, rational but fraught with risk. Dr. Maria Santos warns, accepting Chinese money without ceding control is a difficult, perhaps impossible task. U.S. analysts fear the China deal could undermine regional security and embolden Beijing. The risk alienating the U.S. while becoming dependent on an unpredictable neighbor. The nation's future hangs in the balance. The Philippines is betting it can draw prosperity from China while relying on U.S. security guarantees. The risks are real: debt dependency, sovereignty erosion, and economic pain from U.S. tariffs. If Manila succeeds, it could set a new model for small nations navigating great power rivalry. If it fails, it may become a cautionary tale, caught between giants, forced to choose, or left adrift. The coming years will test the nation's resolve, diplomacy, and unity. The world is watching, hoping the Philippines can steer a steady course. The stakes, nothing less than the nation's future.